One of the most powerful empires of our time aren't nations, but banks. From humble beginnings in San Francisco to becoming a giant that shapes economies and governments worldwide, Bank of America's story is one of ambition, crisis, and survival. But is it a guardian of global stability or a cartel of unchecked power? Stay with us as we uncover the hidden history of modern finance. And don't forget to subscribe to Zimo Voice for more untold stories shaping our world. Trust in banking is both the most fragile and the most powerful currency. For more than a century, Bank of America has risen and stumbled, only to rise again, riding the tides of confidence, innovation, and ambition. Yet in the 21st century, the old battles against rival bankers and Wall Street titans have been replaced with new struggles. The relentless pace of technology, the unforgiving eye of regulators, and the sharp voice of customers armed with social media. Brian Moynihan, taking charge in the shadow of the 2008 crisis, understood that survival was not enough. Bank of America had to reinvent itself, not just as a bank, but as a global institution trusted to move trillions of dollars every day. His vision was not grandiose expansion, but rather stability, discipline, and focus. Where Giannini once fought Morgan with daring and defiance, Moynihan chose to fight against inefficiency, bureaucracy, and reputational scars left behind by scandals. But even as Bank of America embarked on digital transformation, rolling out cutting-edge mobile banking apps, experimenting with artificial intelligence chatbots, and closing hundreds of physical branches, the ghosts of its past kept returning. Investigations into unfair lending practices, accusations of hidden fees, and lawsuits over mortgage mismanagement continued to haunt the bank. For many customers, the question remained, could they really trust a giant that had stumbled so often? At the same time, the world was changing faster than ever. A new generation of customers, millennials and Gen Z, viewed banks with suspicion, favoring fintech startups, mobile-only platforms, and cryptocurrencies. For them, the idea of trusting an old institution with marble columns and century-old legacy systems felt outdated. Bank of America now found itself in a battle not against Wall Street titans, but against innovation itself. Still, there was resilience. By the early 2020s, Bank of America had one of the most downloaded banking apps in the world. Billions of transactions were being processed digitally every year, reducing costs and boosting efficiency. For Moynihan, the lesson was clear. In the age of smartphones, banking had to be as simple as a swipe. And yet, beneath the sleek apps and glossy reports, the fundamental truth remained. The bank could not afford another collapse in trust. The history of Bank of America is, in many ways, the history of American finance itself. From Giannini's daring rescue during the 1906 earthquake, to the wars with J.P. Morgan, to the digital battles of the modern age, the story has always circled back to the same themes: risk, power, ambition, and trust. And as we look to the future, a haunting question lingers. Will Bank of America, a symbol of resilience and reinvention, continue to thrive as a global giant? Or will it, like so many institutions before it, one day fall victim to its own size, its own ambition, and its own history? Because in the end, no empire, financial or otherwise, is immune to collapse. Bank of America today is more than just a bank. It is a pillar of the financial system, a gatekeeper between ordinary people and the complex machinery of global capitalism. Every day, trillions of dollars flow through its networks. Salaries are paid, mortgages are approved, governments borrow, corporations issue bonds, and investors trade stocks, all through the vast infrastructure of this one institution. In many ways, when Bank of America sneezes, the world catches a cold. But with great scale comes great scrutiny. Critics argue that the bank has never fully escaped its old habits. In the years after the financial crisis, Bank of America paid tens of billions in fines, more than any other U.S. bank. The charges range from misleading investors to predatory lending practices that targeted vulnerable homeowners. Each time, the bank settled, paid, and moved forward, yet each fine added to the narrative of an institution that too often placed profit over people. This is the paradox of Bank of America. It is both a vital lifeline and a lightning rod for controversy. On one hand, millions of families rely on its services, trusting it to safeguard their savings, fund their businesses, and support their dreams. On the other hand, watchdogs see it as a symbol of everything wrong with big banking: impersonal, powerful, and too often unchecked. Yet the bank has not stood still. Over the last decade, it has tried to reshape its image by emphasizing sustainability and social responsibility. It became one of the largest financiers of renewable energy projects, investing billions in wind farms, solar arrays, and green bonds. Its executives began speaking of climate change not as a distant issue, but as a financial risk that could destabilize economies. In doing so, Bank of America positioned itself as a leader in sustainable finance, an effort not only to adapt to new realities, but also to rewrite its narrative. At the same time, the bank has sought to expand its reach in emerging markets. In Asia, Africa, and Latin America, it provides financing for infrastructure, trade, and technology. But here, too, questions arise. Supporters say such investments create growth and opportunity. Critics counter that they often trap poorer nations in cycles of debt and dependency, echoing old patterns of financial colonialism dressed in modern clothing. Meanwhile, in the United States, competition has only grown fiercer. J.P. Morgan Chase, with its charismatic leader Jamie Dimon, is widely seen as the more dominant and respected institution. Citigroup continues to wield global influence, while Goldman Sachs has carved out a reputation as the elite's investment bank of choice. Bank of America, despite its size, often struggles with identity. Is it a people's bank, serving the masses with accessible services? Or is it a Wall Street giant, chasing profit through scale? The truth, of course, is that it is both, and that dual identity defines its power and its challenge. The digital revolution has added another layer to this struggle. Fintech firms like PayPal, Square, and Stripe, along with cryptocurrency platforms, are threatening the very foundations of traditional banking. They offer speed, convenience, and innovation, while Bank of America still carries the weight of old systems and old reputations. To survive, the bank has poured billions into digital transformation, building one of the most advanced mobile banking systems in the world. And yet, the shadow of disruption looms large. Perhaps the greatest threat to Bank of America is not any single rival, but the changing nature of trust itself. In the past, people trusted banks because they had no other choice. Today, trust is fragile. Customers can move their money with a tap, invest without brokers, and borrow from alternative lenders. Trust, once earned by scale and tradition, must now be earned through transparency and accountability. And here, the lesson of history returns. Amedeo Giannini, the visionary founder who built the bank a century ago, succeeded not because he was the biggest, but because he was trusted by people who had nothing. He served farmers, immigrants, and shopkeepers when no one else would. That trust built an empire. But trust once lost is harder to rebuild in any branch, any app, or any skyscraper. The story of Bank of America, then, is not just about finance. It is about people, about power, about ambition and consequence. It is a story of resilience, but also of warning, because the question is no longer whether Bank of America is too big to fail. The real question is it too big to trust? In 2008, the financial world trembled. The housing market collapsed, mortgage-backed securities imploded, and institutions once thought untouchable teetered on the edge of collapse. Lehman Brothers vanished overnight. Merrill Lynch was gasping for air, and Washington Mutual became the largest bank failure in U.S. history. In this chaos, Bank of America stood at the center of the storm. On the one hand, it was deeply entangled in the toxic assets that triggered the crisis. Its countrywide division, acquired just months earlier, had been one of the most aggressive mortgage lenders in America, approving risky loans and packaging them into securities that spread like a virus across global markets. The acquisition became one of the most disastrous deals in banking history, saddling Bank of America with billions in losses and lawsuits. On the other hand, Bank of America was called upon as a rescuer. At the urging of the U.S. government, it swooped in to acquire Merrill Lynch, the iconic investment bank whose collapse threatened to spread panic through Wall Street. The deal saved Merrill, but also nearly destroyed Bank of America. The firm inherited enormous liabilities, toxic assets, and billions in bonuses that outraged the public. In the aftermath, anger boiled over. Bank of America, once seen as a conservative and stable giant, was now vilified as part of the cartel of reckless banks that crashed the economy. Protesters filled the streets, carrying signs that read, "Banks got bailed out, we got sold out." The bank received $45 billion in taxpayer-funded bailouts through the Troubled Asset Relief Program TARP, cementing its image as a ward of the state. But behind closed doors, a different reality unfolded. Bank of America, alongside J.P. Morgan, Citigroup, and Wells Fargo, became one of the Big Four, a cartel-like group that dominated American finance after the crisis. Smaller banks collapsed or were absorbed, leaving the giants even stronger. What was supposed to be a cleansing fire that punished reckless risk-taking instead concentrated power in fewer hands than ever before. For critics, this was proof of a system rigged in favor of the largest institutions. Bank of America, far from being humbled, emerged as both a survivor and a beneficiary of the crisis. Its balance sheet was battered, but its dominance grew. It was too big to fail, and in being saved, it became too big to challenge. This is a contradiction that defines modern finance. Crises devastate ordinary people, but for the largest banks, crises can be opportunities. While millions lost their homes, their jobs, and their savings, Bank of America rebuilt itself with the help of public money, government guarantees, and the very system it helped destabilize. The years that followed saw an avalanche of lawsuits. The Department of Justice, state attorneys general, and private investors all came after Bank of America for its role in the mortgage meltdown. In 2014, it agreed to pay a record $16.65 billion settlement, the largest civil settlement with a single entity in American history. The announcement was presented as accountability, but for many, it was just another cost of doing business. The bank admitted no wrongdoing, and the executives responsible largely walked away untouched. Yet despite the outrage, Bank of America adapted. It trimmed its riskier divisions, streamlined its operations, and invested heavily in digital banking. Slowly, its reputation began to recover, at least in the eyes of investors. By the mid-2010s, it was once again one of the most profitable banks in the world. But the scars of 2008 remain. For a generation of Americans, Bank of America is not just a bank. It is a symbol of betrayal, a reminder that when the system broke, ordinary people were left behind, while the giants grew stronger. And yet, the story does not end there. Because Bank of America's rise and survival is part of a much bigger picture, the global architecture of finance itself. A structure where U.S. banks, backed by the dollar's dominance, wield enormous influence over the world's economy. The question now becomes, did Bank of America merely adapt the system, or has it helped create one where power is concentrated in the hands of financial cartel, a cartel that transcends borders, governments, and even crises themselves? Bank of America's story is not confined to Wall Street or Main Street America. Its true significance lies in the way it connects to the larger machinery of global finance. To understand this, we must begin with one undeniable fact. The U.S. dollar is the backbone of the world economy. Every major oil deal, commodity trade, and international loan passes through the dollar system. Countries from Asia to Africa, Latin America to the Middle East must secure dollars to buy energy, service debts, or build infrastructure. This creates an invisible network of dependence. And at the center of this network sit the largest U.S. banks, with Bank of America among them. The bank's role as a too-big-to-fail institution gives it unique privileges. It not only safeguards the savings of millions of Americans, but also acts as a channel for dollar liquidity worldwide. Through correspondent banking, clearing services, and international subsidiaries, it holds a financial chokehold, the ability to grant or deny access to the dollar system. This power becomes most visible during times of crisis. When sanctions are imposed on countries like Iran, Russia, or Venezuela, it is not just governments enforcing the restrictions. It is also banks like Bank of America cutting off access to SWIFT networks, freezing accounts, and ensuring compliance with Washington's directives. In effect, financial institutions become instruments of state power, extending U.S. influence far beyond its borders. But this influence is not just political, it is deeply economic. Bank of America, along with J.P. Morgan and Citigroup, facilitates international loans, underwrites bonds for foreign governments, and manages vast sums of global capital. For developing nations, this creates a paradox. On one hand, access to U.S. banks brings stability and investment. On the other hand, it creates dependency, a reliance on institutions that operate primarily in America's interest. Consider Africa. Many nations there struggle with crushing debt burdens, much of it denominated in U.S. dollars. When the Federal Reserve raises interest rates, these countries face higher debt payments. Bank of America, deeply tied into global bond markets, benefits from these flows. But for the poorest nations, it means less money for schools, hospitals, or infrastructure. Or look at Latin America. In countries like Argentina or Brazil, cycles of boom and bust are often tied to capital flows managed by big U.S. banks. When times are good, credit is abundant. But when crisis hits, the same banks pull back, leaving economies stranded. Bank of America profits either way, through fees, interest, or restructuring deals. This dynamic has led many critics to argue that the big banks form an informal cartel of U.S. finance. Together, they set the rules of access, enforce the dominance of the dollar, and profit from the volatility that traps weaker economies in cycles of debt. And yet, despite criticism, governments around the world still turn to these institutions. Why? Because alternatives are limited. The euro lacks the global reach of the dollar. China's yuan is rising, but still heavily controlled by Beijing. And cryptocurrencies remain volatile and unregulated. For now, the dollar system and the banks that operate it remain supreme. Bank of America thus embodies a paradox. Domestically, it is a symbol of both stability and betrayal, a bank that both saved and hurt millions during the 2008 crisis. Internationally, it is part of the scaffolding of U.S. power, a private institution that plays a role more akin to a geopolitical actor than a mere bank. The question is not whether Bank of America is powerful. It clearly is. The real question is whether that power serves the many or the few, whether it stabilizes a global system or perpetuates cycles of inequality that keep entire nations in poverty. And as history shows, financial empires do not collapse overnight. They evolve, adapt, and reinvent themselves. The survival of Bank of America after scandal, crisis, and public outrage is proof of one thing. In the world of high finance, the giants may stumble, but they rarely fall. To understand the global power of Bank of America today, we must rewind in 1944. In the small town of Bretton Woods, New Hampshire, world leaders gathered to shape the post-war economic order. Out of that meeting came a system that would elevate the U.S. dollar to unprecedented heights of power. The Bretton Woods Agreement tied global currencies to the dollar, and the dollar itself was backed by gold. This effectively made the U.S. the banker of the world. Institutions like the International Monetary Fund, IMF, and the World Bank were created to manage global finance. And they, too, were anchored in the dollar system. For Bank of America, founded decades earlier in San Francisco as a lender for immigrants and small businesses, this shift opened up new horizons. As the U.S. economy surged after the war, the bank expanded aggressively, riding the wave of American dominance. By the 1950s and 60s, it had become the largest commercial bank in the U.S., a behemoth that mirrored the country's rise as a superpower. But Bretton Woods didn't last forever. In 1971, President Richard Nixon ended the dollar's convertibility to gold, unleashing what became known as the Nixon shock. The world moved into a system of floating exchange rates, but the dollar supremacy endured. Oil-exporting nations, led by Saudi Arabia, agreed to price oil exclusively in dollars, creating the petrodollar system. This ensured that any country wanted to buy energy, the lifeblood of modern economies, had to hold U.S. dollars. For Bank of America and its peers, this was transformative. The petrodollar system created endless demand for dollars, which in turn meant endless demand for U.S. banks to hold, move, and invest them. Every barrel of oil pumped in the Middle East, every shipment of crude bound for Europe or Asia reinforced the centrality of American finance. By the 1980s, this power reached new heights. The debt crises of Latin America revealed just how dependent poorer nations were on U.S. banks. When countries like Mexico or Brazil could not pay back their dollar-denominated loans, it was Bank of America and others that dictated the terms of restructuring, often with the IMF as an enforcer. These deals brought austerity, cuts to education, healthcare, and public services. While ordinary citizens suffered, banks recouped their money with interest. The story repeated itself in Africa, in Southeast Asia, and beyond. Debt became a leash, and Bank of America was among the institutions holding it. The term financial empire was not hyperbole. It was a lived reality for nations whose sovereignty was limited by their dependence on the dollar and the U.S. banking system. Domestically, the bank's image was also shifting. It was no longer just a community lender, but a global powerhouse, part of a cartel of U.S. megabanks shaping not only economies, but also geopolitics. Whether through financing trade, underwriting government debt, or facilitating U.S. foreign policy goals, Bank of America was a key pillar of America's post-war hegemony. Yet, with great power came great vulnerability. The oil shocks of the 1970s, the Latin American defaults of the 1980s, and the Asian financial crisis of the 1990s all exposed the fragility of the system. But each time, the bank survived and often came out stronger. By the dawn of the 21st century, Bank of America was no longer just a bank. It was an institution woven into the very fabric of globalization. It managed trillions of dollars in assets, financed governments, advised corporations, and touched the lives of millions across the globe. This is the foundation upon which the 2008 crisis struck. And it explains why, even after disaster, the bank was rescued. It wasn't just too big to fail. It was too central to the global financial order to be allowed to collapse. As the 21st century unfolded, globalization accelerated and technology reshaped finance. Bank of America, already one of the biggest institutions in the world, faced a new challenge: how maintain its dominance in an era when money itself was going digital. The early 2000s saw a quiet revolution. Online banking became mainstream. ATMs were everywhere, and credit card usage exploded. For Bank of America, this was a golden opportunity. By acquiring MBNA in 2006, then the world's largest credit card issuer, it gained millions of new customers and secured its place as a titan in consumer finance. Plastic cards became one of the bank's most powerful tools for revenue, creating streams of interest and fees that poured billions into its coffers each year. But credit cards were just the beginning. The financial world was entering the age of surveillance. Every transaction, every loan, every online purchase left behind digital footprints. Banks like Bank of America collected and analyzed this data, not just to manage risk, but to shape consumer behavior. They could predict spending patterns, evaluate customer loyalty, and even partner with corporations to market products directly through financial data insights. Meanwhile, geopolitics increasingly intersected with digital finance. The U.S. government relied on major banks to enforce sanctions, track illicit money flows, and identify suspected terrorists. Under laws like the Patriot Act, financial institutions became extensions of state power. If a government wanted to cut a country, a company, or even an individual out of the global system, banks like Bank of America were the ones to flip the switch. This blending of private banking and government policy blurred the lines of accountability. Was Bank of America merely a financial institution, or was it also an arm of state power? For critics, the answer was obvious. It was both. By the 2010s, fintech startups began to challenge traditional banks. Mobile apps offered easy payments, lending platforms bypassed traditional credit checks, and cryptocurrencies threatened to rewrite the very rules of money. But Bank of America adapted quickly. It poured billions into digital banking infrastructure, becoming one of the largest mobile banking providers in the United States. By 2020, tens of millions of customers were managing their finances entirely from their smartphones, all within Bank of America's tightly controlled ecosystem. Yet beneath the sleek digital platforms, old problems persisted. The bank was repeatedly accused of predatory practices, from hidden fees to unfair mortgage foreclosures. Lawsuits and fines stacked up, yet profits remained robust. For ordinary people, Bank of America seemed untouchable, too powerful to truly be held accountable. The emergence of cryptocurrency posed perhaps the most direct challenge to the banking cartel. Bitcoin, Ethereum, and other digital assets promised decentralized finance outside the reach of banks and governments. Publicly, Bank of America dismissed them as risky, volatile, even dangerous. Privately, it researched blockchain technology, filed patents for digital payment systems, and invested in ways to control the new frontier. This dual approach, resisting while quietly preparing to dominate, is a hallmark of the bank's strategy throughout history. Whether it was community lending, global finance, or digital payments, Bank of America has rarely been the first mover, but it has always been among the strongest survivors, waiting until the dust settles before asserting its dominance. By the 2020s, the institution once founded to serve immigrants in San Francisco had become a digital empire, managing trillions of dollars across the globe. Its mobile banking app became more powerful than many smaller banks combined. Its investment arm influenced global markets, and its role in U.S. policy remains central, whether through enforcing sanctions, supporting government borrowing, or stabilizing markets in times of crisis. But with this power came renewed criticism. Could a bank this large, this deeply embedded in both government and global finance, ever truly serve the public? Or was it destined to remain a cartel-like entity, profiting from crises, shaping policy behind the scenes, and reinforcing the inequalities that define the modern world? One thing was clear. Bank of America's story was not just about money. It was about power, surveillance, and control in an age where finance was no longer just numbers on a balance sheet, but the very architecture of modern life. The story of Bank of America is not frozen in the past. Its history of survival, through wars, depression, scandals, and financial collapses, tells us something crucial about the future. This institution is built to adapt, and it is built to endure. Today, we stand on the brink of another transformation. The age of cash is fading, replaced by digital payments, contactless transactions, and virtual currencies. Central banks across the world are racing to develop central bank digital currencies, CBDCs, state-backed digital money that can replace physical cash. For Bank of America, this is both a challenge and an opportunity. If the United States launches a digital dollar, it will not bypass the banking system. Instead, mega banks like Bank of America are expected to serve as the primary gateways. Every citizen could hold a digital wallet, but the infrastructure, the pipelines of the digital economy, would run through the same banks that dominate today. The result: even in a cashless world, Bank of America would remain the gatekeeper. Artificial intelligence is another frontier. Already, the bank uses AI-driven algorithms to detect fraud, monitor markets, and even guide customer service through chatbots. But the deeper power of AI lies in prediction. Imagine a financial system that doesn't just record what you spend but anticipates it, nudges your behavior, and steers entire markets through data. With trillions of transactions under its roof, Bank of America sits on one of the largest pools of financial data in the world, a resource more valuable than gold. Yet the future is not without risks. Cybersecurity threats loom large. A single hack could disrupt millions of lives. Geopolitical tensions between the U.S. and China, for example, could fracture the global financial system, forcing banks to choose sides in a new Cold War of currencies. If China's digital yuan gains traction, the dollar's supremacy, and by extension, the supremacy of banks like Bank of America, may come under challenge for the first time in generations. Then there's the rise of decentralized finance, or DeFi. Blockchain technology allows people to borrow, lend, and trade without banks at all. For now, these systems are small and unstable compared to the banking giants. But history has shown that innovations dismissed as irrelevant can one day become unstoppable. Just as Michael Milken once turned junk bonds into a trillion-dollar market, the seeds of today's crypto and DeFi experiments could grow into something much larger. Bank of America knows this. That's why it is quietly investing in blockchain patents, testing digital ledgers, and preparing for the moment when not if the rules of finance shift again. The bigger question, however, is one of trust. After decades of scandals, bailouts, and public anger, will ordinary people trust banks to control the next era of money? Or will they seek alternatives, whether in cryptocurrencies, local banking movements, or entirely new financial models? For now, the balance of power still rests with the giants. Bank of America controls trillions in assets, serves tens of millions of customers, and remains tied to the heart of the U.S. government. Its survival through every storm makes one thing clear. Unless something truly revolutionary breaks the system, the bank will continue to define the future of money. But perhaps the most unsettling truth is this. The story of Bank of America is not just a story of a single bank. It is a story of a financial order that has come to govern the modern world. A system where private institutions wield power, once reserved for kings and empires. A system where crises are not catastrophes, but opportunities for consolidation. A system that ensures that no matter how much the world changes, the bank, always wins. The history of Bank of America is a mirror of modern finance itself, a story of ambition, innovation, crisis, and survival. From its humble beginnings lending to immigrants in San Francisco, to its rise as a global powerhouse entwined with governments and corporations, it has come to embody both the promise and the peril of the financial age. It is a bank that has lifted economies, fueled growth, and financed entire industries. But it is also a bank that has been at the heart of scandals, foreclosures, and public outrage. It has been celebrated as a savior in times of crisis and condemned as a symbol of greed in times of collapse. And yet it endures through the Great Depression, the oil shocks, the Latin American debt crisis, the collapse of 2008, and the digital revolution of the 21st century. Bank of America has not only survived, but often emerged stronger. For many, this resilience is proof of its systemic importance. For others, it is evidence of a cartel-like system that shields the powerful while leaving ordinary people to bear the cost. Now, as we look to the future, the questions grow sharper. Will digital currencies and decentralized systems truly challenge the giants of finance? Or will they be absorbed into the machinery of banks like Bank of America? Will artificial intelligence and surveillance finance bring stability? Or will they deepen inequality and control? And in a world where money itself is becoming virtual, will we ever be free from the grip of the financial empires that rule behind the scenes? The answers are not simple. But one thing is certain. The story of Bank of America is far from over. It is not just a story of one institution, but the world we live in, a world where finance shapes politics, economies, and even the future of nations. As we close this journey, ask yourself, is Bank of America a necessary guardian of global stability, or is it the face of a system that ensures the rich grow richer while the rest are left behind? We'd love to hear your thoughts. Share your perspective in the comments below. Do you see this as a story of resilience or a warning of unchecked power? And if you found this documentary insightful, don't forget to subscribe to Zimo Voice for more deep dives into the hidden forces shaping our world. Because sometimes, the most important stories are the ones unfolding quietly, behind closed doors, in the boardrooms of the banks that hold the keys to our future.